Oil prices have stabilized today around $86 US a barrel following a surge after Hamas launched an attack on Israel. For more, let's bring in Jason Schenker, president of Prestige Economics and a Joint Special Operations University non-resident fellow. Jason, thanks so much for joining us today.
Thank you for having me.
I wonder if first we could just put into context the region. So when we're talking about Israel and the connection to oil here, it's not because Israel or Gaza have a lot of production going on. I think in Israel, maybe there's two refineries. It's not necessarily about them directly.
No, this is really about the broader regional risk. And I think the biggest questions are, could this escalate? Could this turn into a regional conflict or war? And of course, there are a lot of questions here around what may have been Iran's involvement on the back end of this. Of course, the Wall Street Journal reporting that Iran had some planning involvement in this attack and greenlit it. There are questions as to whether, I think whether that happened or not. And there are going to be risks that remain until those questions are settled. We know that Hamas and Hezbollah are both financially backed by Iran, and so that does present risks that Israel might come into conflict with Iran, although that's not the primary concern right now. So that means that price risk could linger for a little while Israel first turns its attention to securing Israel and dealing with Hamas in Gaza.
Yeah, let's break that down just a bit. So Iran has denied involvement in the actual attack of Hamas on Israel at this point. But as you mentioned, there are reports of that out there and the funding of Hamas by Iran. But so when you're thinking about the possibilities there, if Iran were to be involved in some way, pulled into this conflict in some way, what could happen? Is that, going to be sort of inciting the concerns of other countries outside of this region? And I'm thinking of the U.S.
Yeah, I think that's a big concern. And of course, we just saw President Biden speak about the fact that there are American hostages currently being held in Gaza. So that's also a primary American concern. What we're looking here is a risk that the conflict system expands. And that's definitely one of those where you have other countries with citizens that are being held hostage. That's a major risk. And we know, right, Hamas and Hezbollah are funded by Iran. So whether it's state-funded, state-sponsored, state greenlit, right? We know there's Iranian involvement. That's not a secret. That's part of why they're labeled a terrorist organization internationally. So there are very clear risks here that the conflict system could expand. Although in the near term, again, the focus really is going to be on a focus on Hamas and then figuring out the forensics of what were the different roles in the planning, in the training, in the execution? Was there any cyber warfare involved? What entities were involved in that? Those are things I'm sure the Israelis and many others are trying to figure out right now. And that's where the risk could linger for oil prices, that risk that the conflict system expands.
What sort of bar do you think would need to be met for the U.S., say, to move ahead with more sanctions when it comes to Iranian oil?
Well, I think if they can establish that the Iranians greenlit this, I mean, we already know, right? It is fact that Hamas and Hezbollah are Iranian backed, right? This is the part of their axis of resistance that they're calling it. They fund them, right? So these are funded terrorist entities by Iran, and they are now currently holding American citizens hostage. I don't know how much higher a threshold you need for sanctions than that, but that might be sufficient.
What about the transportation of oil in the region? What infrastructure could be at risk? What should we be focused on?
I'd be less concerned about the infrastructure at the moment. I'd be more concerned about where we might see sanctions. We might see dislocations in the global market. And of course, Janet Yellen just today talking about the fact that there needs to be a more strict application of a price cap to Russian oil supplies, right? There's a $60 price cap for Russian oil to be handled, traded, insured, transported by Western entities. That price has crept up into the mid-80s, and now there's a call for more tightening there as well. So I think we're going to see some more focus on sanctions in the U.S., both for Iran and for Russia. And then there's questions as to what could be the knock-on effects in the Russian war on Ukraine, because there's only so many missiles and arms and things to go around for significant conflicts. And right now, we know that Russian war on Ukraine still ongoing, and a lot of this just looks like this is another front in Cold War II.
So what do you think? I mean, you mentioned that this is, price risk sort of hanging over oil markets for this time until we know where things go from here. But what do you think are the major driving factors when it comes to oil in the near term?
Yeah, right. So in the near term, the biggest concerns are a fewfold, right? Whether this conflict expands, I think that's number one. Number two is that the Saudis and the Russians have been holding back oil production. OPEC has as well, but Saudi and oil production have been held back in excess of those OPEC commitments. So we're also seeing that supply held back. That's what drove up oil prices so much from the end of late June, where those additional barrels held back by the Saudis and then held back by both the Saudis and the Russians. And of course, that's all the upside risk. The downside risk is the global economy is slowing. The Fed may look to raise rates again, potentially on November 1st, right? We've got still a high inflation problem in the United States, in Europe, in many other countries. So those things present some downside risk to growth in the near term. In the long term, population growth, demographics, those things are likely to drive up oil demand and prices. But in the near term, it's these competing factors of geopolitical regional risk that right now is extremely high and could linger. And there's that curtailed supply that we're seeing from Saudi and Russia that's being held back. That's really the upside. The downside's the growth piece, where there's downside risk to global growth. And we just saw yesterday the IMF, or overnight, the IMF World Economic Outlook downgraded the growth forecast for 2024 from 3 to 2.9%.
Jason,